Hi, this is Mark with your analysis for the week commencing the 3rd of March. I had an email on Friday from long-term member Peter, who is doing extremely well with this British pound move that we signalled 3 weeks ago, I think it was now, and when we were looking to short at 5,700. Now, the dilemma that Peter has, and all of us who are in this trade, he is currently up $6,000 and therefore is beginning to panic. Let me explain the strategy, and I'll explain a number of ways that you can deal with this scenario. It's obviously a pleasant scenario to be in, but the thing is, we're looking here, this is a potential triangle break I showed you last month, and the theory behind a triangle break is you measure the top to the bottom, and you look at that middle figure there, 310, ignore the last number, and this is roughly a 3,000 pip potential move here. The theory goes that this move here will be reflected in a move down here. So what do you do about it? Well, the danger is if price is going to bounce anywhere, then 150, the psych level, is the most likely area. Therefore, you have a number of options. You can simply have nerves of steel and continue to let the trade run, or what you can do is you can scale out. You can take some of the profit out of the trade. Let's have a look here on a daily chart. On a daily chart, I showed you last week, we'd entered up here at 157.00. I'd shown you how I'd moved my stop on one of the trades. I've been this twice for reasons explained last month. I had locked in here 400 odd pips. Now, I'm in a similar scenario to Peter, is that I'm heavily in here and I don't want to lose the lot. So what I'm going to do is, with my more aggressive trade, I'm going to move my stop, and I'm going to move my stop just above this 5,200. Now, the problem is, if it bounces back up here, I could lose 200 odd pips, which would be a bit of a sickener. But what I'm going to do is, I'm going to take half of the profit off this trade. And all you do is go to close your trade, and let's say if you're in at full lot, you change it to 0.5 of a lot, or whatever amount you wish to take off, and then close half of the trade. Therefore, if it comes back and takes you out, you have banked $3,000. So, options are move stops and hold your nerve, leave stops where they are, hold your nerve, but just accept the fact if it whips back up again here, you are not going to beat yourself up, because some of us here are in for a lot of profit, and this is the dilemma facing all of us. So I say, for me, I'm going to scale some of my profit out of the trade, and then I'm going to leave my stop up above that 152.30 area. Now, if you're not in this trade, I'd be very careful now, because 150 is a huge psych level, and obviously price failed to break there Friday after a very big move down, I mean 200 pip range on Friday. I would leave this alone. If you're going to look for entries on this pair, you either need a clear break and close below 150, and I would look for that on a daily chart, because you could get a fake out on a 4-hour, and then price will simply come back and reverse up again. And you can see here on Friday we had price came down, the low here was 150.12, get you interested for a move up, then a pin bar reversal, but this is late Friday, and I'm always wary of moves late Friday, but it's highly possible that price is going to come back up here, and therefore I would be interested to short, and we've got this 4-hour 55 as well. Euro USD on a monthly, I've shown you last week, this is tram tracks, almost an engulfing candle, clear sign of a reversal from a technical perspective, stochastics rolling over, and I explained that last week I was walking away from this because it was simply too messy. We'd had a break, a potential break, and then there was these EMAs in the way, and again this is very similar scenario to the pound. 130 is hugely significant on this pair. We have had a 5-8 cross, stochastics are down, we had MACD divergence giving clues, lots going on, but the 130 is the main area and we haven't broken it. Ways to play this, you could look for a pullback to the trend line, standard breakout, so short at 3,200. I am interested, but I will not place a forward order to long at 129. And what I will do, I would look to trade that from a 4-hour chart, so I will look for price to come down, see how it reacts, and then take a potential move back up. However, I will only take that half stake, as it is clearly counter trend. What I did say to you last week in Wednesday's update, that the Swissy looked a better deal. Now, back end of last year and early this year, I was trading the Swissy rather than the Euro because it was more predictable. We were getting clear bounces off major areas of support and resistance, and then the last week or two it just got very messy. But what I was saying to you on Wednesday's update is, if price clearly broke and closed above 93.50, then I would be looking for a standard M2 trade, and it did it. Look at this, perfect example of an M2 on a daily chart. Candles closed, price broke above 93.50, very next trade away, and you're currently up 100 plus pips. This is the kind of thing that we're looking for. This was a major trend line, but I wasn't looking for a move above at that time because we'd had this 5-6 days of price completely undecided, and the euro was all messy as well, and the Italian elections. So I waited for a break and close above this major support and resistance area. You could have taken a punt down here and got lucky, but that is a clear M2 breakout trade. Now this is the Aussie dollar on a weekly chart, and in recent months we have had tons and tons of winning trades from bounces. But what's happening? We are trying to break the Bollinger Band at the moment. I said last week 120, 1020 would be an area to be looking for shorts, and that's my thinking at the moment. However, because the pound's in an area of major make your mind up at 150, because the euro's in a major area at 130, this will be reflected across all pairs. The dollar had a very good week last week, but often when you get this scenario you will get a rebound. So the best case scenario with this Aussie dollar is a pullback back up here, 103.40 area for a potential short. If it carries on down here, then you look at clear break and close below 1020, and again I would do this on the daily chart. We had a fake out last week on a 4 hour. I would look for a clear break and close below 120 with a view then to an M2 pullback and a short. And again, potentially here, you take this to be a triangle. This is a potential huge move on this pair of 900 odd pips. The theory goes back down here. Also explained ad nauseum in recent weeks and months about the correlation with gold and silver. It's not been as clear recently, but what did silver do? The previous week it broke out. It came back M2 trade to the pip because logic is price has broken a major area of support and resistance. Traders then see price coming back to it, fingers in the fire, and price pulled down. And gold as well last week. To me this is all highly illogical. Gold was a messier pullback. It broke through 1600, then we're back down again. But if they continue to fall, then you could expect the Aussie dollar to go the same way. There is a lot of red flag news this week, and there is a lot of Aussie dollar red flag news, and including some just after the market open. So watch those news announcements carefully, because it would be those that could well drive the Aussie dollar back down again. The Aussie dollar yen, I showed you in the midweek update. I was fortunate with the gaps, and again, if you're not sure about trading gaps, I explained this in Wednesday's update. There were some big gaps here. I showed you how in recent weeks we'd looked to long at 95.10, which we did, and at the market open last Sunday night we had an extra bonus of 100 pips up to target, thank you very much, and price promptly plummeted. Now if you traded this on the daily you wouldn't have lost, but as I say, I showed you in the 4 hour. Let's have a quick recap on this. I'd placed a forward order because that's where I wanted to long. Had you been trading this on a 4 hour you would not have taken the trade, because the candle came down, it clearly broke and closed below it. What you would have done, you started looking for shorts. Euro yen, similar scenario. This is why you don't go in for more than one yen trade at the same time, because had you taken the euro yen at the same time at 120.75 as the Aussie dollar, then you would have lost on both, which is why we only take one at a time. We had big clues of MACD divergence on all of the yen pairs. I mean, it was almost falling off a cliff here that price was going to come back down. This area again is the major line in the sand. A more conservative long on this would be at 120, which is where price came down to the other day, and also just happens to be this daily 55, and you've got the monthly below here. So this would be the main area for me, and currently only interested to long. Dollar yen, we'd had the MACD falling off a cliff scenario here, but the dollar strength last week turned this pair back up again. It bounced off a trend line. I was hoping for 90.20. I'd still look at 90.20. It's a confluence area. You've got this 55 EMA, major support and resistance, and I'm sure if I fib this on here as well, it would be 61.8. Let's have a look. Yeah, not a bad guess. So 90.30, anywhere around here, I am interested along the dollar yen. Now the CAD last week, I said I was walking away, I was running away because I had no idea what was going on with this. We'd fractionally broken this major upper trend line, but price is outside the Bollinger Band here, and we have a reversal candle at the top of a move, so there is a potential for this thing to go back down. Once again, I would trade this off a daily. The CAD is very whippy, very messy, and particularly on 4-hour charts at the moment. I would wait and see what happens. If it broke and closed back below 102, I would be tempted to short. I particularly would wait. If you're going to be ultra cautious, wait for a long at 100. I mean, this could just set off without you, but we have that 55 EMA, and this, if you remember going back last year, we had tons of winning trades shorting this CAD and then longing at this 55. So confluence 100 whole number and the 55 EMA, and once again I'm sure there's a fib in there as well. So lots of reasons why that would be the area. Might not happen for weeks, but as I showed you recently on a euro yen trade, we've got many hundreds of pips by waiting, patience and discipline. Final one, this is the euro pound, and the euro pound I left alone last week, too messy. I put in place here a weekly trend line that goes back to 2009, and that is where price is at now. So the scenarios, let's have a look, make this bigger. You could be aggressive and short here, or you could wait for price to clearly close above 8,700 and the pullback, the view to a further long. The British pound is under a great deal of pressure at the moment. It is at that all-important 150 area, and once again I will be tempted to trade this from a daily chart. Other options for me on this is a pullback to 85.20, 8,500 area. I would be interested to long as well. But those are the key areas. If it breaks and closes above, you look for a pullback the very next candle with a view to a long, and if not, a pullback back down to around 8,500. Okay, there are trades to be had out there. I've shown you the pound, and in the last few weeks and months we've had a few really big trades, and those really, if you can get into big trades and have lots of part winners running at the same time, it makes life a damn sight easier. Have a good week.